Yeah.
Order filled, check us out.
You know what time it is.
This is the Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it.
What's up, guys?
Hey, how's it going, Andy?
Pretty good. So are we live?
We are, yes, we are live. We are live on YouTube right now. And Anne-Marie, how are you?
I'm well, thank you. How are you?
Doing well. I described you as scary good at trading. Is that okay?
Sure.
Sure. Okay. So maybe not okay. Maybe okay. I don't know. But
if the wheels come off the bus today, well.
Oh, okay. Well, so who knows? We'll do we'll do the best that we can given what the market gives us today.
Exactly.
But I think the core here is not necessarily how much Anne-Marie and Andy are about to make in the market. The core here is how they do what they're doing. So Anne-Marie and Andy will be talking through what they're doing. We'll bounce around between their screen shares. I'll be asking the questions that you guys have in chat, and then also I'm a newbie at the end of the day. I'm a student of trading. I'm a student of these two. So I'll be asking some of the obvious questions just to make sure they get answered. So guys, make sure that you're giving me those questions in chat. Now, I want to ask, let's go ahead and start with Andy. Andy, is there anything in the pre-market that has your attention? And if you don't mind doing a screen share, I'd love to see.
Oh, yeah, actually. Sorry about that.
No problem. We'll bounce between you guys screen sharing.
All right, can you guys see that?
Almost. It looks like it's just black right now for some reason.
Okay.
Just darkness. Oh, here it is. We got it.
So we're good. So anyways, I got a clean account here, put 10,000 in it, couldn't help myself, had to make a trade. So it's a little over 10,000 now, but not by much. Anyways, first of all, Anne-Marie, it's a real great honor to be here with you as well. And thank you, Benzinga, for having me. These events are awesome. And I love being able to help the community. But in the pre-market so far, I'm just looking at the top percentage gainers. That's normally what I do. I just go through and click through the top percentage gainers, see what's going on, look at the top volume leaders in Benzinga. And the two that I've seen so far, basically last night I saw FLDM was popping, wanted to take a look at that this morning, and AMTX. But everything that I'm seeing so far is just really pulling back and not looking so hot. So I'm not sure the market's going to provide. And I always say that Fridays can be some of the worst trading. I've lost the most amount of money either in order executions or Friday trading. So anyways, there's that.
Fair enough.
And just a real quick, non-sponsored plug. If you guys don't have these things and you're a trader or you're doing live events like this, you definitely need to have these at your desk, I think. Like,
but is that a squeeze ball? Is that a tension?
It's like a little squeeze, like rubber. Oh man, it's great.
Yeah.
This one,
I just chew my fingernails off. I should probably stop. I got
that one I don't do anymore, thankfully, but this one I can't do live because it clicks like every single time you do it. But I'm sorry, I just had to throw that in there. But honestly, no, this morning so far, I'm not really seeing anything that I think is too great to where I could take a trade at this time. I will definitely keep you guys updated, but I'm just clicking through and seeing what we have.
So really quick, Andy, what software are you using?
Oh, this is TradeStation 10 platform. I have my main platform that I use all the time right in front of me. You guys can't see this. Then I made this over here to help you guys out, just to give you the basics of what I need. I got my 5-minute chart, which is my primary chart. If you can see the cursor, and that's where, I'm looking for my primary setup. If I have a bull flag, I like what you said earlier, grabbing at the lower end of the consolidation on a bull flag. I think that's a beautiful setup because it kind of pays for your trade. You can take off partial profit up at that declining trend line, that negative sloping trend line at the top of a pennant or something. You got your trade paid for, and then you can let the rest ride. And it really helps to let your winners run, which I'm sure we all have to grow. I have to grow in, that's for sure.
So yeah, I appreciate that confirmation, Andy. Really quick, I want to let you finish your thought, and then I want to go over to Anne-Marie and see what she's got going in the pre-market.
All right, well, you can go ahead with that. I can tell you guys about my charts and everything later. And
okay, let's go ahead and do that. Anne-Marie,
right,
what are you looking at?
Well, we've got a couple of really big things that we're looking at today. And the reason that we're looking at it is because we've had this kind of monster fade. And so let me open up my screen to you. Let's see, how do I do that? Share screen.
Yep. Andy, I'm
Yes.
not sure. You might want to turn off your screen share.
Oh, no.
Okay.
I think I can just jump right on top.
Perfect. Okay, I love it.
Yeah,
Zoom.
look at
Zoom is
that.
awesome.
Ta-da! All right. So we have, actually, I have two platforms sitting. I have Tradeovate, that is a company out of Chicago, and they allow for charting for Top Step Trader, which, of course, you guys know Top Step is a funding program for futures, or maybe you don't know that. It's a place where you can get traded as a funded trader. But here's the big thing that I'm looking for. We broke out up above this level. I know many of our participants are a little more junior, and so I won't get all gobbledygook until this afternoon. I'll get a little bit more gobbledygooky. But what happened was we hit a level in the market where everyone said, hey, this is about as far as we're going to go. And we actually shot 9 points back above that. So what happens in a place where people are caught running because a ton of people had sold options at a particular level? They had sold the contracts at 38, 34, and price action expanded way above that. And so a scrambling event, also it's called dynamic hedging, but we know a little bit about hedging ourselves, perhaps. In the dynamic hedge, they turn around and they keep buying it up. But when you buy, or you buy to cover, it's not the same as buying to get inside of a position. And so although you see volume and price action moving, it creates a little bit of a vacuum event that needs a retrace. That being said, we're at the bottom of our retrace. And so right now, this 4-hour chart is really saying old resistance is new support. And that line in the sand tells me as a trader, if I want to start buying here in a downward motion, I can buy until I get to the area where all the traders felt like it couldn't go higher. And so that's going to be 38, 34 or so. And then the traders are going to start making another decision. So what I am seeing right now is the long action, right? So if we were to say, and here is this live account. And so let's say I was going to buy something right here on this 4-hour formation, I would need to look to see what my closest support region might look like. And so I'm going to check out a 30-minute chart, and I'm going to see it running all the way into this big red line, and that's the VWAP. So really, it tells me that the VWAP, volume weighted average price, it tells me how everybody feels in the market right now, and they don't feel so hot. Because the VWAP really says if I'm above this line, I'm making money and the line continues to move up, I will buy more. If I'm below this line, I'm losing money if I'm buying. And so if I come into that line, I'm probably going to try and get out. And so that really is what you look at to say, how do participants feel? And Andy just said this morning, hey, you know what? There's a lot of price action that looks all sloppy from yesterday. And that's exactly why, because this broad futures event says, listen, let's trim off some of this risk and let's pull ourselves into a support/value area and let's see who plays there. So what we're going to see are, and I'm going to slide this over just a little bit. Whoopsie. Yes. Wrong. Where did that go? All right, let's see where this is. Right here. I'm going to slide this over a little bit. And down here, you're going to see over to the right, you're going to see it's called a dome. It's a depth of market. It tells you where everybody's sitting. A bunch of people are up here trying to sell. A bunch of people are down here saying, hey, if it comes, I'm going to buy it. And so you can see that all these sellers are piling up pretty near this VWAP. And so if you're thinking about, hey, am I going to be long? Am I going to be short? What am I going to do? You can look up here and say, you know, maybe what I want to do is short the VWAP, right? And so I'm going to sell something right there. And again, like Neil said, this isn't about, hey, how much are we going to razzle and dazzle you with how much we make? That's going to help. That's not going to help you trade better. What's going to help you trade better is understanding that mechanical flow of what happens when we come into a resistance edge or a support edge, and using a depth of market will tell you, hey, everybody's sort of trying to sell up there, so maybe I'll try to do that too. And when you run with that crowd, you can see what it is that they're trying to do. So my thought in terms of what's going to happen today is, can we recover out of this nasty patch? It looks like we're trying to make a go of it. The big deal is, see all of this area where I stopped heading lower? We stop heading lower, and then the energy is, can I push higher? So it takes two kinds of energies to stop a chart from moving in one direction. It's the energies that says, hold the phone, you can't go any further. And then there's another energy that says, hey, I'm going to push it up into the space. So the question might be, okay, Anne-Marie, let's say that your short gets triggered right here as we're watching it. Where is your risk? This is something that's very, very important for you to look at. If the risk does not hold for me, it's not going to hold right here where I have old support and new resistance. So these are the edges where the traders are going to say, hey, if I get short here and I get up over here at my 28, 29, I need to immediately collapse or my price action is going to go into that 38.32, 38.34 number that I talked to you about that says, hey, listen, this is where all the call sellers opened up their option positions because they thought, hey, price action is going to move in that space. So hopefully, oh, does it fill me? Did it fill me? One tick away. Do you notice what happened? Did you see the big shift? All the sellers picked up and they moved here up to the 30 area. This is what a depth of market tells you. If you're going long, the first thing you're going to do at the VWAP is you're going to take some profit. If you said, hey, listen, I'm going to get up and over my, there we go, order filled. And so I'm going to get up and over into this VWAP, and traders there are going to say, hey, I better take some profit because I know people like her that like to sell around this congestion zone where the VWAP is sitting. They are the ones that are going to start coming in and trying to force price back down. And so you can see them popping right into that zone. See the big fight? A great big fight there, trying to hold 26.50 and then popping up just a little bit. Okay, so what happens when you're sitting in a trade like this? A lot of times we get very nervous when price action begins to go against us. The reason that we don't get an easy feeling about, wow, let me just let this play out, is because we're terribly afraid of losing. Here's a fact about trading. You're going to take a trade, and one of those trades is going to go bad. And so if you stare this down and you say, all right, I have a trade that might go bad, the question is obviously, what needs to happen so that if this trade goes bad and I get stopped out, I can come back to trade another day? What happens there, right? And so as it moves, it's going to press through that. You see all the traders up at the edge of the zone. They're trying to fill that gap. What time is it? 9:30. Oh, live market. All right. Buyers love coming in at the open of the day to push forward, simply because people love to buy these pullbacks in these environments, right? They absolutely love to buy the pullbacks. The problem is when you buy a pullback in a downward pressure event, it always has those wiggle spots that tell you, hey, at some juncture, I'm going to have to test my support action. And so what this chart is going to do, you're going to see it. I'll expand this motion so that you can see them coming up into this area, but not really getting past it. They want to fill the gap. There's another kind of trader that sits around that says, hey, if I open below the close, I'm going to buy it as soon as it opens. So my gap gets filled, the gap between the prior day's close and the open. And from that space, once they fill the gap, they're going to move ahead, right?
Hey, Anne-Marie,
yes.
really quick, which we always get this one, right? Which software are you using?
Okay, so we have two of them up. This is Motive Wave, of course. You know I love Motive Wave. This is on the back end. It gives us all of the really great stuff that we're seeing here. And this on top of it is Tradeovate. And Tradeovate is the platform that many traders can use along with Motive Wave to trade live in the Top Step Trader environment. This is a funded trader program, right? So that's it. Nice and easy. You know, I have a few lines here, but really the one to watch, let's go to this price channel. What I'm doing is, let's make this really thin.
And while you're doing that, Anne-Marie,
Yeah.
I want to stick on this for another 2 minutes till about 9:35, and then Andy, I want to pop over to you.
Perfect. Yes. Absolutely perfect.
Pretty much dishes are almost done for me here. I just took a couple trades and
we're missing trades.
Yeah. Okay. So always interrupt. That's interrupting is good when trades are going on. So I'm all for that. I don't mind being interrupted for that at all, Andy. Not at all.
Well, as you said, I'm a quiet trader, so I'm trying to do my best here for the whole public event. This is my first time putting any live money on a screen ever. So I need this little squishy stress ball thing. So it's amazing though.
Okay, squeeze the stress ball. I'll be the interrupt guy. How about that? You guys can be pleasant and polite and stuff like that, and I'll jump in and be the impolite guy. So actually, Anne-Marie, what I'd love to do is Andy, I know you're squeezing the stress ball, but you're making some trades. So let's check in on you.
Yes.
If you wouldn't mind sharing your screen. Thank you so much, Anne-Marie.
My pleasure.
All right, so I think my screen's up. It's how do we switch it back though?
Just take it.
Take it.
Just do it. So Anne-Marie, I'm not sure what you have to click, but
so here, okay, so I'll stop.
I think that might be best right now because I'm not seeing how exactly to
there you go.
Okay, right. Can you guys see my screen?
What you have to do is go to, sorry, I jumped right in there, but you have to go to your Zoom platform.
Okay, so when you take
bottom.
it goes away. All right.
Yeah,
sorry about that. All right, now I get what you're saying when you say take it.
Yes.
We're all learning today. Thank you.
Yeah. OBLN, basically, that was my first trade here. I grabbed it because we were holding on the 5th. I was looking at the 5 minute where, as you can see, we have this like sort of bull flag consolidation and we're rounding out here. So that's pretty nice. And as you can see, we were holding that 65 EMA. We had dropped below, I'd say like busting a lower shadow below that pretty much, just a little moves below it. But as long as we're holding that 65 as support, that's a great momentum indicator on the 15-second. It holds it day in and day out. I mean, it's the most reliable indicator that I've ever seen for potential support and resistance. So I went ahead and I took that trade right there. And as I always tell everybody, penny stocks are preloaded with downside. So what I do is I draw a little circle. My stop is this 200 EMA right below it. And I'm willing to build my position within this little zone. I'm not willing to add if it keeps going down, if it breaks my 200 or anything like that. I'm out, I'm done. But I built my position within here. It shoots back up, and being it that I just saw the it's getting a little shaky and all that, I decided to take my profit and I didn't even take partial profit. I really should have. And, I could have went for that whole move. But I don't worry about missed trades either. That's one of the biggest things. We don't worry about missed trades, missed profit. You know, as long as you're trading your plan, trading your thesis, sticking to the plan, then that's what counts. So as you see, it held the 200 and we popped up here, and I took my profit because it looked like it was getting a little weak here in price action. That put me over 0.5% of my account. Then I went over to, I think it was CLPS, OBLN, CLPS, pretty hot movers today. Wow, I'm not able to see what's going on here. Anyways, again, same story. We were beasting out. We were pulling back. I was looking for it to hold the $5 level. And this one, I just, I didn't like the way it was trading and decided to take only a couple dollars profit on it and just get out of it. And as you can see, good reason on that one. And I think I'm probably lucky that I even got out of there with profit. And I'm not really position sizing well right now. I'm kind of not really used to this, but I'll get the hang of it.
Yeah, yes, you will. Yes, you will. So is there anything else you want to show us before we go back to Anne-Marie?
But primarily, I was looking at the 5-minute for my setup. I guess I'll go back to OBLN. And, you know, like I said, we're rounding out, we're consolidating. I wanted to grab at the consolidation, which was the lower end, and it was holding that 65. I look over here to the 15-second, and, you know, I see where I want my stop. Anything below this 200 and max stop would be the 365 right here. I go ahead and take the trade and let it work from there. And, you know, one thing is, this is not one of them, but I'm always looking at the daily for any of these penny stocks. They're garbage. First rule in penny stocks, I'm up, they see me, I'm down. So, you know, I want to make sure that we're not way high in the sky and that I'm just grabbing something that looks bullish on a 5-minute, when on the daily, we're like, you know, we're about to just dump off a demon drop. So, yeah. And, oh, sorry, the daily's right here. New setup for me.
Okay. So can you guys, I would like both of you guys, if you don't mind, to go a little bit into why you have your setup the way it is. Tell us about like each thing, what you like to have on your screen, which Andy, you've already done a great job of that. Anne-Marie, you've also already begun doing that. I think that's going to answer a lot of questions for folks. And one thing, I'm sorry, Andy, go ahead. No, Andy, go ahead.
I just want to say, in TradeStation, one of the coolest features here is that they have these bid-ask spread. It's the quick trade bar, and they're limit orders, and you can actually put bid plus one. You can split, or you can take. This is some sort of like algo up market order or something. I don't really mess with that. You can ask TradeStation what that is, but I don't mess with that one. But anyways, you can go bid plus one. Really easy to do this, as long as you have some hotkey set up for canceling all. And I really trade off the spread. That's one of the main things. It tells me a lot about my trades. And I also have to have limit orders, because if I don't have a limit order, I can't feel the action. I can't feel what's going on in that stock. So, you know, I mean, I understand it's easy to get in with a market order, but a market order, you feel nothing. You're just filled. However, you know,
Andy, what's the difference between a limit order and a market order?
Market order is going to give you the best available, which is pretty much, if you're buying, you're going to get filled at the ask and even maybe above the ask, wherever the liquidity is. Me personally, I do take liquidity, or at least I try to take liquidity or come as close to it as I can. I don't really want to offer liquidity and put my orders out there. I'm trading, you know, like I said, I'm up, they see me, I'm down. I'm trading something that's going to be possibly back where it started. So I don't have time to mess around and put my order out there. Plus, in a penny stock, if you're putting your order out there, I think it was CODX just recently, a few months ago, whenever that was beasting out with the COVID stuff. I was in nice profit. I put my limit order out just above the price. I was like, it's working its way up nicely. I'll be able to get that. As soon as I put my order in that thing turned around. And then I went and put my order in at lower to try to get out. And it, like, again, I put my order above the price right there where it was at. It turned even more aggressive at that point. So it's like, every time I showed my order, my limit order, that thing would just hit me even harder. So it's like, you know what? Forget this. I'm not showing any of tipping my hand to anybody. I'm going to make sure that I keep my cards to my chest, and I'm going to take liquidity instead of, offering liquidity in these plays.
So you're touching on what you're saying is pretty loaded, and for beginner folks, I think there's a couple things that you're saying that we need to explain. Number one is, and this is the biggest one, is you have mentioned multiple times in different ways how you keep your cards close to your chest. You mentioned they see when you're up and so forth. Could you explain a little bit about what that dynamic is and how it applies to your trading?
Well, basically, if you look at the level 2 here, I mean, this is moving quite quickly, so we're not going to be able to really pinpoint on anything. But let's say that we got 688 and we got 12,000, or let's say we have 100 at the ask. basically, if I have 1,000 shares and I'm trying to get out and I don't have the liquidity, the offer here, if I'm trying to get out and take liquidity and say I'm taking the bid, and there's 100 there and I got 1,000 shares, I got 900 more shares than what I'm able to get at the bid. So I'm not even gonna be able, I'll get a partial fill if I even hit that bid. So I got to look and find out, where is the number there? Where's the liquidity on that order that I know I can get filled instantly, that's going to give me that fill, and I'm not going to have to put my order out there and show what I'm doing. Same thing the other day. This is totally different than anyway, side note. I like to test and see if they can see my stops every once in a while, and I really like to. I play a lot, guys. I really do. I play a lot. I like to feel and see exactly what they're. I want to know how angry these stocks can get. I mean, you're in Pennyland. They say it's the most manipulated. Well, if it's the most manipulated, that means that's the place that I get to see behind the scenes more than any place. So all the little tricks that they're willing to pull, I get to feel them and see them by being here in Pennyland.
And they is big money, right? This is money that's moving the stocks up and down, or what do you mean?
Well, when I say they, I sound like a conspiracy theorist, and
Exactly.
I don't want to really say market maker here. But I always tell people, I don't care if you call it Darth Vader or what. What it really is it's the smart money. It's whoever's more sophisticated than you are. Whatever traders are out there that are more sophisticated than you, that's the they. I don't really see it as the market maker is some mean guy out there trying to crush all our trades. It could be anybody that's more sophisticated than us and that has maybe a much bigger wallet than us as well.
So, okay, so that's what I wanted to get to is you guys will hear this a lot, folks. You'll hear this on CNBC, particularly with the Nigerian brothers. It's the smart money. Follow the smart money. There are folks out there that they're trading based on triggers that we just don't know about, but they have enough money in the markets to affect the price of stocks. So what folks like Andy are doing, and Anne Marie, and then all of us, is trying to understand what triggers the smart money is using, and then anticipating movements and basically following them, and maybe sometimes kind of predicting what they're going to do. And Andy, I know that you say you like to tinker around and play with things. You're always trying to figure out what the new thing is that smart money's doing, right?
Right. Yep, exactly. And I don't want there to be any illusion, if you don't mind, about penny stocks. Penny stocks are extremely volatile, extremely dangerous. Like I said, the first rule in penny stocks is I'm up, they see me, I'm down. This is not the place. Like, you can make just as good money, trading big cap blue chips. Percentage pays no matter where it's at. It doesn't matter what's going on there. So, the illusion that penny stocks, just because they're cheap, means that you can afford them more. You might not be able to afford them, because this is where you're going to get crushed more than any place else in the market.
Thank you for making that point, beginners. Remember, even if a stock is $900, that doesn't mean that this stock is too expensive for me to trade, and then you have to turn to penny stocks because they're $1 or cheaper. The point here is percentage gained is percentage gained. It doesn't matter what it's coming from. And guys, remember, more and more brokerages are making it possible for you to buy partial shares. So if the stock is 900, you can buy $1 worth of it. That's fine. And you're still going to get percentage returns based on the price movement of the stock. Now, with that, Anne Marie, you look like you're thinking about something. I'm sure you're thinking about a million things. I'm wondering if we can have a penny for your thoughts. Excuse the pun.
You're muted there.
Got to just unmute. There we go.
It's very interesting to listen to Andy as he looks through all of these things. It's super clear to me that we look at different areas, but still looking for sort of the same thing. Where does price action occur? And so a lot of the notes, and I think this thing is going to break out to that northern edge.
Oh, show us. Anne-Marie, show your screen. We want to see.
Oh, share screen.
When I hear the word breakout, we've got to see it.
So we're going to see it break into this edge, right? So we've got this move to the north. Now, for me, this is clearly a space where the buyers have come in and said, hey, we're going to hang on to this position, and we're going to be the part of the group that fills the gap. And so that's exactly what they've done. They've run it right into the close of that prior day. And so what is going to happen here is they're going to say, all right, we've done what we're going to do. Any kind of minor pullback probably going to bring more buyers to the mix. Okay, so as we take a look at this kind of formation, what we see is the trade was, hey, listen, they're going to come into that VWAP. They're going to try and punch over it, but it's very likely that that VWAP is going to provide some measure of resistance. It did for all the time that Andy was talking. It did that, and then it turned right around and began to lift to fill in this gap formation, right? And so now we're at the edge of that trading day, and we're sitting right near where the option call sellers were early yesterday and early in the week. You can look to the left and see old support, new resistance. The long trader would now be able to put themselves on a limit event from this perspective. And so for us, as we come into this zone, we see that something's got to give. And so in terms of either the fade happens or the price action is going to continue up in the forward direction, and then it would stair step through 38.37 and then 38.43 and so on and so forth. But what you are seeing right now is the trader who said, all right, it's going into the gap fill, and now I'm going to see how far the chart can pull back once the work to fill the gap has been done. Here's a very big thing that traders sometimes don't think about if they're newer. Big money always has a plan about what they think is going to have happen on the day. And many times they can influence that motion. Andy speaks about this in terms of, hey, I'd like to find out where they are. I'd like to see what they're doing. Where are they coming in? And so if we look at something like this formation here that we're looking at in motive wave, it's also showing us these bubbles. And these bubbles are big trades. They're big trade bubbles. And you can see that pockets of very large trades have come in right into this edge, right into the resistance zone. And for many of them, it's a place where some of them are going to go, all right, as long as I'm up over the close, I'm heading higher. And some of them are saying, hey, I filled the gap. Now I can head lower. And so you can see the big battle. 38.32 and a quarter, a lot of them sitting there, holding onto that zone. They're going to push that price action up if they are sitting from a bullish space, and they're going to try to push it down if they're sitting from a bearish space. So what we have to see is this place is a battleground. That's the whole purpose of me having this conversation with you. It's a battleground. And when you take a trade at a battleground, you make a choice without knowing who the winner is. And so that sometimes can be very bad. Okay? And so when you take a look at this kind of space and you say, all right, I am going to say old support, new resistance, I'm going to short it, and then the chart runs all the way up, that's going to be bad, right? So if you think that, hey, the chart's going to move upward, and you take a big order and it collapses into support, also bad. So a decision is being made here. And for us, we have to look at that and go, all right, well, what does that decision have to look like if it's going to continue to run to the north? And so when we are trading and we see this kind of breakout information, the first thing as a trader we have to do is say, all right, I know it's supposed to reverse here. Does it reverse? I have to give it room to reverse. Otherwise, it's going to continue in the edge of trend. And that is really what this price action is doing right here. It is coming right into the edge of trend that says, hey, listen, either I have to reverse or this trade is done. So for some of us, we go, hey, I am going to start feeling very nervous if I lose more than X in a day or more than Y in a day. And so the key thing for you to always do is to say, hey, I must obey what my risk thresholds are, or I'm going to have myself a psychological problem that says, hey, this isn't going to give me the mental opportunity to re-engage. I don't know what you think about that, Andy, when you get to a space where you go, all right, how much do I want or will allow myself to lose before I become emotionally compromised? And then what do you do about that?
For me, basically, I try to avoid the whole emotional thing. Usually, what I'll do is I'll try to. I'm not trying to go for 1% of my account to get 1%. I'm trying to go for that, so I'm not trying to go for like 15% or some ridiculous number. But what I do is I'll cut up my trades in like 10 trades. So right now, if I'm operating with $10,000, I'm going for $100, and I'm looking to get $10 each trade. And I don't really have a max risk per se per trade. I have a daily max risk. So if I hit that daily max risk, which is, let's say it's 1-to-1. So let's say 1%, because I have a high win rate. So I'm winning more days than I'm losing. So on my losing day, I'm willing to take 1%. And then I have a nuclear option to where if I hit the, sorry, I'm going to close out this loser right now, guys. All right. Anyways, I was looking to hold that consolidation right there and get a bounce back to the 65 on the 15 second here. Predictable area to bounce is right here at this 200 on the 5 minute. But I'm more or less, I'm willing to lose 1% in a day because I'm winning more days than I'm losing. But if I have to hit that nuclear option, like let's say I just get really stupid, I will not let myself go past 3% of my account for a loss. I find that to be a ridiculous number, though. I don't think that anybody should be trying to lose 3% on their account or 5%. I mean, I hear 5%. When I first started, 5% was that number that I was told that you're supposed to do. So I started going for that. And all of a sudden, I'm losing like, thousands of dollars. And I'm like, I can't sustain this because I don't know what I'm doing. And if I keep losing 5%, I'm going to be out of this game within just what a couple of months at the most, maybe a couple of days at this rate. So I've established that pretty much just taking small chunks and letting it grow. That's the main thing. You can go as fast as you want. You can drive a Lamborghini. You can drive, the fastest motorcycle you want and drive as crazy as you want, as long as you're managing your risk. And the way you do that is not exposing yourself. You're fighting the biggest monster there is, the market. And when the market swings, if you don't have much exposed, you can't get hurt. But if you have a big chunk of your account in there, and you're trying to grow and, max out leverage in penny stocks just seems crazy too. But anyways, it's just, it's about what you expose.
Okay. So, again, this is fantastic that Neil and the team has put us together because really we look at the market completely differently. So here's a very interesting thing. I hear what you're saying about the numbers, but if I'm here to be completely transparent, when I trade, there's always an element of, wait a second, I'm not feeling so good here. I just made a trade and this trade didn't do what I thought it would do. And so now I'm sitting where I did all this work and I thought it was going to work, and then it doesn't work. And then my brain begins to go, wow, you just must be thinking about this wrong. You just must be framing this wrong. You must just not understand what's happening. And so it's because of my nature to second guess myself, right? And so in the grand scheme of things, what happens to us when we're looking at formations, let me clean this out here. Oops. You see the price action trying to fade.
So while you're doing that, Anne-Marie, if I can interject really quick,
Of course.
We have some questions, guys. There will be a Q&A portion. I want to get like the questions that make sense with the natural flow of conversation in now, but there will be a Q&A, so we'll be able to ask all of those. So use those notepads. One other thing I want to add is that, guys, we have the YouTube chat. Some of you are on Hey Summit. Some of you are just on YouTube. I just give me a 1 if you want to use our dedicated Benzinga Discord chat, where you'll be able to keep the conversation going at this boot camp and then all future boot camps, so where you guys can all learn together in one spot, and then we can probably get some folks in there to do ad hoc sessions. Maybe Anne-Marie will join us from time to time. If you give me a 1 if you guys want to switch over to Discord now, we'll get you the link. All you got to do is click it, open it up, and then we can have our primary chat there. And give me a 2 if you just want to stay in YouTube for now. And then you guys do that, and then I'll Anne-Marie, I'll get out of your way so you can keep
no
going.
problem.
If you don't mind, Anne-Marie, the one thing about what you were asking there is if you're too stressed in a trade, if you're getting to where you're needing blood pressure pills or whatever, like that's what I always say anyways. You know, if you're starting to sweat too much, I think that pretty much I tell everybody that you might be positioned too large in that position. That's why adding into losers is not really the best thing. Like I said, I'll put a circle as far as where I'm willing to build my position, and outside of that circle, I will not add any more. Because once you get into that precarious area, say you're below something you know is a predictable area of support and resistance, you're below that, and you're thinking you're going to bounce that. That's very precarious if you add it into your position, and you're now sitting there bigger than what you maybe intended. So the way for that is just to trade your plan, have the thesis, know your stop, know how you're going to take profit on that trade. When I first got into this, I had people said that, I'm like, there's no way I can do this. I can't know how do I know where the stock's going to go and where I'm going to take profit? So I'm just buying, like hoping it's going to the moon, and I'm ending up in profit, and I'm ending up right back down into the red, and I'm losing more than I'm making because I don't know how I'm going to manage this trade. And I don't even think about my stop. I'm just like, well, I don't want to, what do I do now? I'm looking at Sarah, my wife. I'm like, what do I do now, Sarah? She's like, I don't know, stop out. And I'm like, I don't want to stop out though. What if it bounces back up? And I tell people also, that's another thing. You can't have your trade plan be, what if it bounces back up? There's no hope in this, and there's no what if. You have to trade the plan that you came into it originally with. And as long as you set those parameters, you really, there's no worry or stress to it. Obviously it's exciting, it's emotional. It's trading is going to be emotional no matter what. You got money on the line, you need to pay bills, whatever it is. But anyways, if that helps at all.
Yeah. Again, you said you had some questions, Neil. You wanted to interrupt for some. Yeah, please go ahead.
Yeah. So one is I think the future is breaking out quite a bit there. So I'm not sure if you want to talk about that, but one question that came up is gap fills. So if we can just go to basic, definition, and then what that really looks like in practice. So gap fills.
Great. All right. So let's go to a daily. All right. And this only is a futures event. So let's consider the following. This morning, we can see, wow, price action is really bouncing, right? We see that the futures are bouncing off of the low. The interesting thing is our candle looks red. So what might this mean, right? And so what the candlestick being red says, yesterday, the price action at the close of the early part of the afternoon, 4 o'clock, 4:20, where all of these guys close, they ended up at, let's see what the high of this is. Oops, don't have that. It appears to be 38.46, right? And so what a gap fill does is it takes where you are currently and it pushes into first the low of the prior day, which is that 38.32, 38.34 option sellers area. It's very, very big. And if it holds, they're going to try and push it all the way to the close of that prior day. That movement is the filling of a gap. It means that if the morning opens up at 9:30 and price action is way down here, and the prior day closed way up here, buyers are going to try and fill the gap in a generally bullish pressure event. So that's what filling a gap means. Fading a gap is the opposite. It's the price action gaps up, and so price action opens way higher than the chart. Let me see if we have any kind of fade here. I don't really see any. So fades will give us the opposite, where traders will try to push price down into the prior day's close. So that's really what they're in the business of doing right now. They are trying to wipe out all the losses from the prior day's trade. And so if we look at it on a 10-minute chart, it would be somewhere around this zone with 38.46 potentially. That seems to be what that number is going to give us. All right, so let's put a line right there and see if we actually get to this zone where, yeah, we expect price action. That would be the fill of the gap. Notice there's a lot of movement to come up there, and what they're stopping at is very close to the prior day's low. So this brings up a very good point for those of us trading big formations and charts. How the prior day's high, low, open, and close looks is going to matter quite a bit when you come into that zone. They're going to say, hey, let's get to this low right here. Let's see if we can get up over it. Remember again that traders, big money traders, have this notion of here's what is most likely to happen. And so let's see if we can do something about that. Let's see if we can make that happen. And so what the traders are going to do is say, all right, let's see if we can make the price action push further. And so we'll push it into the first level of resistance and we'll begin to take profit. And then when it comes into another area of support, we'll try it again. And so it's always moving from support to resistance to support to perhaps a new resistance to perhaps a new support. That happens every single day when price action takes the forefront of what we're going to do. So Andy was talking about, hey, listen, when you have a plan, that plan, one of the traders that might have a plan is, hey, I'm going to trade the gap fill. So the moment it gets up over a moving average or the moment it gets up over the VWAP, they say, hey, listen, I'm going to buy it and my target is going to be 38.46. It's not a matter of, how much am I going to make or how much am I not going to make. For me as a trader, it is all about how much I do not want to lose. And as long as I keep a focus on my risk threshold, see, that's the only thing I can control. I can't control where the market goes, so I can't control how much I make. I can't control anything about market action. The only thing my mouse does is allow me to choose where I enter and what my risk is. I can have a target, but the market doesn't care about that target. I can have a risk event, market doesn't care about that either. So my risk might be 10, but the market only thinks it needs a 2. It's all about, are you positioning yourself as close to the regions of frontline support / resistance so that when you get into the trade, you're going to do the very best that you can at that specific point in time.
Can I ask you a question, Anne-Marie?
Yeah.
On the right here on this trade that you have up right here, we dropped out. We were rounding out there. Basically, for me, I would like to know if you would look for a rejection in between the 832 to 838, because that's typically what I do. If I see a drop off like that and we're rounding out, you know, I at least expect a bust stop, you know, sitting on the runway a little bit, like temporary resistance level at that point. Do you look to take some profit when you get to that point where we just got rejected with that upper shadow there?
Yes, certainly. Certainly, because I'll always look to the left and realize we cannot predict the far out future. If you take a look at Barron's or whomever, Fortune, Forbes, whatever, they always put out their January issue of a look at 2021. Here's what our key managers are saying about the year. Listen, nobody does that. It's just not, it's not as good as people think it might be. They're hitting like 40%. And you can tell the near future by looking at the recent past. So I'm always going to look to the left.
Absolutely.
And so the answer is going to be, hey, if I look to the left and I see everybody's been selling there, I'm not going to hold my long above that zone.
Do you plan
I'm going to take profit. Pardon?
If we break through there, do you plan a trade beyond that? Would you plan for it to break through, retest, and then look for your next target? Or,
you know, it depends what the depth of market looks like. If this begins to, if I start seeing some bright blue action here on any kind of fade, I think yes. Ultimately, we know what the gap fillers are trying to do. We know they're trying to get to 38.46, right? We know they're trying to get over what Asia markets did to us when we opened and started really. Here was 11 o'clock. That's when Asia gets in full swing. Here is 3 o'clock. That's when Europe gets in full swing. And what we've said is, you know what, we're going to wipe out the Europe loss, and now we're going to wipe out the Asia market loss. And so that is a lot of motion. It's a very big candle. If we look at it from a 4-hour perspective, that's it doesn't even, it shows me the different 4-hour.
Hey,
that
guys.
4-hour motion's huge.
I want you to finish your thought, but I once again have to be your ungracious host and interrupt you. We have a new fighter in the arena. This is Ricky Gutierrez. Ricky, do you mind unmuting yourself? I just want to say hello, and if you wouldn't mind, could you do a brief introduction about yourself for the folks watching?
Of course. First off, I need to just say I really like what Anne-Marie was saying. And how's it going, Andy? Nice to meet you. My name's Ricky. I actually just finished my live trading session with our group, and I'm super happy to be here. So the market was pulling back, and that's one of the things that we're kind of like anticipating. One of the things that I really like that Anne-Marie said is I feel like a lot of people as of right now are so obsessive about trying to like always maximize their profit or let their runners run, which I think is a great mentality, right? Everyone trades in different ways. But the thing that I like about what she said is, you have no control of how that trade plays out. All you can do is manage your risk and work towards that goal that you set for yourself. And I think that expectation just makes it so much more real for someone that's just getting started. So yeah, I like that.
Thanks. I appreciate that.
Of course.
if you don't mind, that's why one of the reasons I always say I'm looking for how stocks die 101. I'm looking for those areas of rejection. You know, I don't want to be stuck on the runway all day, as what Mike Bellafiori's One Good Trade says. I want to know that, hey, I'm looking that this thing's probably going to make its move. It's going to get rejected here, at least temporarily. So I either want to take partial profit or, like you said, just manage your risk.
And I like that you guys both were talking about taking partial profits. One of the things that I've been trying to focus on much more, especially as the overall market becomes a little bit more on the overbought side, is not being afraid to reduce position size, because we can always buy back in, especially if we see new highs and then there's more momentum. I would rather manage my risk when holding overnight and get back into a couple of day trades as long as I can manage my risk intraday. So I really like that idea.
So with that said, Ricky, your style's pretty different. And guys, we have 3 very different trading styles here. The intent here is to show you how people that are making a living from their trading and their investing go about this every single morning. That way you have an idea of what success looks like, so that you can bring those questions to the table later. Yes, it may be disorienting. Hopefully it's not completely confusing for everyone. But if you're confused, you should be. I'm confused. These guys confuse the hell out of me every time I talk to them. But I'm here to ask your questions. So if you guys want me to try to simplify things, that's what I'm here to do for you. So make sure you get your questions ready for the Q&A coming up. And with that, Ricky, I would love it if you could share your screen and just give us the summary, or the too long didn't read of how exactly you trade the markets every morning. You're muted, by the way.
Here we go. So I'm going to start sharing my screen. I think, do I have permission for that? Let's see. Here it goes. How do we look? Okay.
Perfect.
Beautiful. Yeah.
Alrighty. So one of the things that I've been focusing so much on is, of course, Tesla. It's not something that I've always, and Neil, from like the previous times that I've spoken at these Benzinga events, I had a big focus on like trading ETFs such as TQQQ and SQQQ, depending on where the market was going. But one of the things after the talk of Tesla being added to the S&P 500, we have just been seeing that it's been continuously bullish, especially since that, I think it was in, what was that, early October or early November, where it pushed up, I think 10% during pre-market session. And ever since then, it's been overall super, super bullish. And the past 2.5 months have been like my top performing months. But now we're seeing a lot of consolidation. We're not really seeing Tesla make higher highs and higher lows. And one of the things that I actually made a video about it yesterday, and literally just talking about the levels that we're at right now with /NQ, right? I follow /NQ a lot, and I think I saw her talking about the E-minis. So /ES is also a big focus for us. And just looking at like, to not being afraid, again, with that simple mentality of like understanding when things are looking like almost too good to be true. And it's not that I think the market's going to crash. I mean, at the end of the day, no one knows when anything's going to happen. But all I wanted to anticipate or prep for was, as we reach these 180-day highs, it's like almost every single time as we reach these overbought levels, we have some form of correction or pullback to about that SMA line. And then again, we make new highs, pulls right on back, new highs, pulls right on back, and it makes new highs, right? So as we reach these levels, now this is where I begin to kind of rebalance the positions that I bought at these lower levels and begin to sell off some of my positions. And my positions are, I don't trade personally lower cap stocks. I trade stocks like Tesla, stocks like Alibaba, stocks like Twitter. So Twitter was one that I think a lot of you guys, if you guys haven't paid attention, well, obviously with, Trump being banned from Twitter, one of the things that happened is it acted as a negative catalyst, aggressively sold off. I saw that to be viewed as like a good deal opportunity where something acted as a negative catalyst. I don't see that to be detrimental to the overall company. I can get it for a discounted rate. I buy a very small position on it. And then if it begins to indicate signs of an uptrend, I'll add more to my position size because it has so much upside. So from where we're at as of right now to previous resistance levels, that's about 17%. But because my position size is so small right now, as I'm barely entering, if it goes south, then I can quickly just cut losses and manage my risk. And one of the things that I've been doing for the last couple, I don't know if you guys do this, but for the past 2 weeks, because we're approaching earnings season, one of the useful tools, and I would love to see if like Benzinga has something like this, where even on your guys' Instagram, maybe you guys can share the stocks the day prior that are reported or that are reporting earnings. And the reason that this is so like important, in my opinion, is obviously all of the stocks that are reporting earnings are not going to experience positive earnings. And what this can lead to are stocks like, I actually want to show you an example of one. And one of those is ticker symbol AA. So ticker symbol AA was previously very bullish. It hit all-time highs at 26.20 and then aggressively sold off and has still been selling off. Not only did it sell off when it reported earnings, but it sold off 11% the day after and now 3% today. And it doesn't mean that this is a good stock to buy right now, but it's at least presenting, you know, it's showing that it's a little bit more on the oversold side. So it at least meets the criteria to be added to my watch list. I can set my alerts. If it begins to indicate signs of an uptrend, I at least have a stock that has nice upside and that was previously bullish. And I did this with a couple different stocks. I don't think Lemonade was one. Lemonade was one that just met that very similar criteria, where I like stocks that are bullish on the larger charts, pulls on back, so it builds a nice little reversal opportunity, and that begins to consolidate. So we talked about it before, where it's like the 3 stages of a reversal. And I actually don't think I have that PDF on me right now, but talking about the simple idea where when something corrects itself after it makes new highs, it consolidates, it finds a support, and then we wait for proper indication of a reversal, making sure that that price action is there, and then I can slowly average up into that position. And for those that are watching, you guys might be asking like, well, what do you mean average up, or do you buy with your entire account as it sells off? Not necessarily as of right now. So Twitter can be an example. I have 400 shares, and obviously we all have different account sizes. I trade with a little bit over $100,000. So me being in Twitter with 400 shares is viewed as a very light position. So if you have $1,000 in your trading account or $1,000 in your investing account, then instead of going $1,000 all in, especially when we're so unsure if it's going to actually begin to indicate signs of an uptrend, I go in with a fraction, right? So I can go in with 10 or 20% just to get some skin in the game when it begins to consolidate. And then if it begins to indicate signs of an uptrend, I'll add more to my position size. And the beautiful thing about this is, at least for on the risk management side, how difficult is it to cut losses, right? When you're just getting started and you're fully invested. It's like that emotional, like it's so draining. And I think it makes it a lot easier when you have a lighter position, because you can tolerate that risk a little bit easier rather than being fully invested and feeling like the overall market's against you. So all I've been focusing on lately, and I can actually show you the tool that I use. I go to Market Watch and I go to Calendar, and every single day, depending on what day of the week, right? So today's Friday, I go to Friday, and then it tells me all the stocks that are reported or reporting earnings today. And the thing I do about with this is, with this information, I wait for them to report earnings. I do my own analysis to see which stocks sell off, and then I add them to my oversold watch list. Again, all of these stocks are not stocks that meet my criteria. They're just stocks that are oversold. So I'll add them to that watch list. I'll set my alerts, and then I'll start filtering them out depending on which ones are indicating signs of an uptrend. So it's just like, if you've been struggling to find stocks that are good deals that were previously bullish, that's just something during earnings season that I thought could be kind of useful. You guys can let me know what you think.
All right, guys, that was a lot of information. Thoughts in the chat. Let us know. No, it's good. You're packing a lot of good stuff in a short period of time, and that's what we're about here at this boot camp. Go ahead, Andy.
As far as the reversals that you're talking about, Ricky, how do you look for those? And do you look to enter at like a real body level, or do you enter at the high of the candle?
Yeah, no, real body level. Depending on how previously bullish something was, I'll go in with a very light position. So Lemonade is an example right now that I have not entered at all. And it's also depending on how aggressive I am currently invested in other positions. And one of the reasons that I'm being a little bit more careful right now is because of how overbought the market is. Although Lemonade, I view it to be a decent deal based off of it pulling back. I know if the market continues to sell off, so will Lemonade. So it's more depending on, I'm taking into consideration overall market conditions, as well as how Lemonade is currently performing as of right now. So as of right now, because of these overbought levels, I'm super, super careful with how heavy I go into any of these positions, because I want to anticipate a pullback, and I want to have enough buying power that if it does pull back, I can buy them for a good deal rather than being fully invested and hoping that they only continue to uptrend.
It's awesome.
Yeah, that's good stuff.
Absolutely good stuff. Now,
Yeah,
now
good stuff.
Andy and Anne-Marie, you guys are looking at some price charts. Do you see any stocks that are catching your eye right now?
Well, real quick, if you guys want me to let you know this, I've said this before in the boot camps, I believe, but we just had a halt. We came out of a halt in APWC.
What's a halt?
Basically, the stock is halted due to volatility, for whatever they have to catch up or whatever they got to do. But when right before that stock halted, I could see that it was about to halt because we got locked up. The price was not moving at all. And once you see the price getting locked up like that, if you look at the level 2 and you watch for the numbers stepping in like an ever-growing wall on the bid or the ask, and it's not moving at all, that's pretty much giving you the idea that it is more likely it's going to halt. I mean, sometimes it'll break free and be fine, but a lot of times if you're trying to look for a halt before it gets, comes through, that's a good way to let, just keep in mind that you can see these halts before they happen a lot of times.
Love it, love it, love it. I just want to add a little bit of color to that. The halt, when a halt happens, that's usually because there's a whole bunch of price change going on with the stock. So the exchange that the stock is actually traded on will stop allowing buying and selling of the stock. That's to prevent absolute chaos, making and destroying a company in a day or destroying people's accounts. Is to mitigate risks that come with extreme volatility. So that's just there are a few different formats and causes for a halt, but that's the basics of what it is.
Well, one cool thing is we just had somebody in the stream. They were stuck in a halt for, I believe, months, and they got it sent over. Basically, they got, I don't know the details about how to do this, but they got it sent over to another exchange, and they got to sell their position and get out of that halt that they were stuck on another exchange because it was still trading on another exchange. So that is possible. Like I said, I don't know the details on how to do that myself. I've not done it, but it's kind of good information to know.
All right, what's up next? Anne-Marie, are you seeing anything? Are you still looking at the E-mini?
I am, but what I just did a bit ago was take a look at Market Watch, and I love the heat map because it tells us whether there's broad participation or whether participation is mixed, right? And today we can see, if we take a look at that heat map, and I don't actually have a heat map on either of these in my platform. Maybe, Ricky, you could pop your screen up again and show that heat map for, say, the S&P or the NAS, so we can see that difference. Because when everybody's running in the same direction, it's very likely that you're going to have price continuation. When it's mixed and we have really bright greens and really bright reds, or we have this faded edge of colors where both green and red are existing and it looks like it's halfway, it's going to be a market that is going to give you quite a bit of sideways motion. And one of the things I like to look at are market internals. We'll be talking about those a little bit more this afternoon in terms of the deeper study gauges in the charts. We can see, there we go. That's beautiful. So that's all of his watch lists, to include the indices and his personal ones. So that's why you'll see Microsoft several times. That's why you see Apple several times. But what you'll notice is half the screen is green and the other half is red. And you can see the tech is really getting the bid, right? There's more tech events that are green overall from the big ones. They look a lot brighter than everyone else. And so when the market has this divided space, you're not going to see price action that's super pretty. It's going to move up and then it's going to move down, and it's going to move up and it's going to move down. So what is the takeaway when you go, wow, how does taking a look at this picture help me trade better? What it helps you with is potentially, listen, don't jump the gun. Don't buy your breakout there. Let it confirm, right? Let it break over that edge and then come back and hold that price edge before you get in. Make sure all your moving averages are upward across different time frames. What you want to do is make sure that there's room for you to sit tight in your position while the market chops around into what it's doing, right? And so one of the things that we'll notice here is it moved for the ES, it moved all the way up, and now it's moving all the way down. And the big bid in the NASDAQ is also starting to fade into a support zone. And you can see those things if you look at indicators like up volume minus down volume across all the markets. If you take a look at, a tick chart. And so we'll talk about those undercurrents that sort of help you see what's going on. But one of the big things is what Ricky just showed. And that's, hey, if you think things are going great and you're just going to go ahead and buy whatever, take a look at that heat map. And if they're divided halfway, you're going to see some fading action. That fading action is going to come into play. So that's what I wanted to add there from that perspective.
Great. Now we are 3 minutes away from the Q&A, but I'm thinking, why don't we just get it started?
Yeah, great.
Guys, if you are on Discord, or if you are in YouTube chat, use this opportunity to ask any question imaginable. You're talking to 3 people with pretty different, I mean, let's keep it reasonable. It's got to pertain to investing and or trading. But no dumb questions. You got 3 people that are trading for a living very successfully. They have different styles. They've got all the cuts and bruises from making mistakes in the past. The goal here is to help to do 2 things. One is I want you guys to get experience-based answers to your newbie questions. Number 2 is I want the answers to those questions to prevent you from getting the bruises that I'm sure that these guys have. All right, so this is about mitigating risk, going in educated, and making really smart decisions in the market. Okay, I've got one, and I'd like to hear, because I think this might differ for you guys. I'd actually be surprised if it was the same answer for all of you. And this goes to the whole group. Do you guys close your positions at the end of the day?
Personally, for me, if you buy it in the pre-market, you should probably keep it in the pre-market. And if you're buying intraday after market open, you should close it at market close. If you're trying to day trade, if you're trying to swing trade or anything else, then obviously that's a whole different deal. But yeah, if you're buying in the pre-market, holding into market open is probably not the best idea a lot of times. And same thing with holding into the after-hour session.
So that's a day trade specific answer.
Absolutely.
All right. And guys, day trading is when you're buying and selling a stock within the same day. Once we get to holding it overnight, we're talking about swing trading. Would you agree with that definition, Andy?
Oh, yes, absolutely. Everything.
Okay.
Keep intraday.
There we go. All right. All right. So let's go, Ricky. Let's go to you next. And reminder, you're muted. Yeah. Do you close your positions or do you keep them open at the end of the day?
Yeah, so when it comes down, and I think the best way to put it is it's all based off of your initial intention. I hate the idea, and I made this mistake all the time when I was first getting started. And I don't know if Anne-Marie and Andy can agree, but when you take a day trade as like that was your initial intent, but it doesn't go according to plan, that you end up holding it or bag holding it, as a lot of people like to say, and it turns into a swing trade. I think that's one of the worst mistakes that you can make. So if your sole intent was to enter as a day trade, then 100% that should be what it sticks to. I also have a lot of positions like Twitter, right? I bought this one a couple of days ago, and my intent was to buy and hold. So although I might have a series of stocks that I might day trade, or there's a stock like Tesla, right, that because it's so overbought, I might day trade it aggressively with a much larger position size intraday, but I'll hold a much smaller position size overnight to mitigate that risk, right? Yes, it's so bullish that I want to have some skin in the game, but not so much that if it pulls back, I get devastated. And I think that balance of understanding your intent for both day trading, swing trading, or investing, yeah.
Great, thank you. So a more nuanced, perhaps hybrid approach to the question of holding overnight. Anne-Marie, same question to you.
Well, it really depends. I have a lot of trades that I hold for extended periods of time, right? So I work in the option space a lot. And so as I look in the market, there are some trades that I will take and I'll say, hey, this should run into X. And so I'm going to allow it to do that. I know that if it doesn't, this is going to be where I'm going to get clipped. And if it does, then I have my success. So again, it's about how much am I going to lose if the wheels come off the bus here? And so that's the reason I focus on that, is because really the honest open space, as somebody who's been coaching and working with traders for a long time, is that many traders will run out of money before they learn how to trade. And the reason they run out of money before they learn how to trade is because they don't manage risk. They have a $2,000 account that they want to have 500% returns. And so they're going to say, hey, listen, I'm going to buy an out of the money call on Tesla. I'm going to buy, a $2,000 call at whatever, and I'm just going to load the boat, and Tesla's going there. And they're not going to have enough time in the option, or they're going to have a theta erosion, or the option will decline over time because price stays in the wrong place. Mm-hmm. For me, it's about, again, and I will piggyback on Ricky here, what is your framework for your trade? What are you thinking is going to happen? And so if you frame out the trade, like Andy's talking about in the pre-market, and you're going, hey, it's going to go from here to here, it makes sense that he says, hey, if I'm entering under pre-market parameters with pre-market conditions, maybe I ought to close under those same kind of parameters. What we have a tendency to do, and this is the holding trade space where we get into trouble, is that we do an analysis on a 5-minute time frame without considering the big picture. Our chart goes in the wrong direction, and then we go to the big picture and we go, well, I guess I'm just going to hold this until XYZ. And so that is, that's using Einstein's word of relative, and what he means by that. If you're in a train watching two people throw a ball back and forth, that ball is going to look totally different if you're in the train than if you're outside the train looking at them do it on the inside. It's just the way relativity is. And you can't look at, hey, I'm going to study this on 5 minutes or study it in the pre-market and then all of a sudden go, well, it didn't come out quite like I want, so I'm going to stay here in the broad market for it to do that. And because of that, I always say start big and collapse inward. If you start big in terms of, hey, weekly charts, monthly charts, daily charts, and you collapse inward, big money moves on big time frames. They don't move on small time frames. They move on big time frames. So if you look at things on big time frames, and you go, okay, I have an understanding of what the big guns are trying to do here. When you telescope in, it'll tell you, okay, I'm looking at this 5-minute. It looks great, but it doesn't have a ton of runway. It's got runway from X to Y. And so I'm going to take it from X to Y. And that gives you the big framework of the best way to look at trades from that perspective. And whether for me as a futures trader, there's a tremendous amount of leverage there. I normally close out at the end of the day unless I see a very big collapse point and the day just doesn't have enough time, and I go, all right, let's go for it again. Let's see if we'll collapse a little further, or let's see if we bounce and I'm going to take that directional trade, and it might slip into the after hours, but I certainly cannot sleep if I have a big position on. I just can't do it.
Mm-hmm. So go ahead, Andy.
If I could add this to what Ricky was saying with the bag holding and stuff, though, I have a rule, and I think that everybody should have some sort of rule with bag holding. If you have 3 times max daily risk in your bags, probably best to just cut those. Don't let yourself get over 3 times max daily risk. So if you're going for a 1% loss in your account per day, 3%, once you hit 3% loss in your account, you can no longer hold those bags. You got to cut them no matter what. So, I mean, there's people, they're getting 46% down on their account in one bag. You know, some people are 90%, I'm sure. Ridiculous. Yeah, the things you hear, things I hear at least.
Yep, and guys, when we're talking some terms here, we'll clarify some of these terms. Just a reminder that this is the experts in the morning, and then we'll be moving on to some very beginner stuff. But go ahead, Anne-Marie. I'm sorry.
Oh no. I was just saying that, you know, that's the psychology event. You get, speaking as somebody who has a background in the science of neurotransmitters and the like. When cortisol hits the brain, which is what happens when we go, holy cow, I am way down in this position. What do I do? Your ability to go through cognitive prefrontal high quality logical decisions just went into the rubbish bin. Literally. You cannot think logically when your brain has got you on tilt somewhere. It absolutely cannot. And so the reason that we never want to go down like that in our trades is because we stop thinking clearly. And the hard thing for traders to do is say, listen, what's the risk? What's the final risk if I look at something and I go, yeah, I want to take this position right here. What do I do? The trader will be first thinking, I don't want to miss out. I don't want to miss out. So I'm getting involved here. And they'll forget that, listen, your risk threshold is X. And if you look at something and you go, I don't want to get out here, but it looks like it could pull all the way back to whatever, but it's not going to. And if I don't get in right now, it's going to roll right off. It's going to roll right off without me. That space is what's going to keep you trading longer for more. Is if you look at something and you go, can I afford to take this trade? And if you can't, just say, I'm going to sit out. We have to learn to balance that fear of missing out with the fear of losing, because we will drive ourselves to a place where we go, oh my gosh, I can't miss out. And once we're in there and it's the wrong side of the trade, all we can think about is, oh my gosh, how am I going to get out of here? And it's a lot better to sit. I know it doesn't feel like it, but it's a lot better to sit looking at the window, wishing you were inside, than being inside and watching it turn into a dumpster fire and going, how do I get out of here? Much, much safer if you're looking in the window. Obviously, nobody wants to miss out, but you've got to think about, if I'm wrong, how badly will this hurt? And can I come back to fight another day?
Yeah, very, very common impulses covered there.
Absolutely.
The fear of missing out, or FOMO. And then, of course, when things start to go south, getting stressed and panicking.
Yeah.
So
I think
guys,
we all had that deer in the headlights situation going on, where you're basically, what do I do? What do I do? It's like, you know what to do, but you don't want to do it. You don't want to cut your loss and move on. And I can tell you, ripping off that Band-Aid is the best thing you can do. It feels so much better to be out of that position that you're wondering, what do I do? And who cares if you could have made money or could have came back to green or whatever? It doesn't matter. Just live to fight another day, like Anne-Marie said.
Yep. Don't hold on to a trade that's going south. Otherwise, you become an investor. I think is what we've talked about last time. Is we're here to trade. Don't become an investor if you don't intend to when you start. So guys, a pretty rudimentary one, and this definitely comes down to your styles. For the whole group, I'll start with Andy again. Do you trade a finite watch list of stocks, or any type of asset class? Do you trade a finite watch list of assets on an ongoing basis, or do you go in every day and discover new assets based on the parameters that match your style?
Basically, when I come to the table here, I'll consider stocks that were ripping, recently or had really great news. But mostly I say it this way: I have a dynamic watch list. My watch list is the top percentage gainers. If I see something, for example, climbing the top percentage gainers list there, it's like definitely that's something I want to take a look at. Like we just had APWC just rip to 100%. I didn't even know really what APWC, Asia Pacific Wire and Cable Corp was. So it could be like China JoJo drugstore. We've made some profit on that as well. So whatever's popping up there, and if it has what we need, then we're trading it. If it moves, we can make money.
All right. So that's one side of the equation. Ricky, what is your approach? Are you trading a set list of stocks or assets, or are you discovering new ones when you go in?
Yeah, so one of the things that I have really tried to focus on is I definitely do have my go-tos, and I've shifted these go-tos from time to time. I don't necessarily look for top runners. Obviously, I'm not a momentum trader, so that's not my intent, right? So I like Andy's approach, and because that is just so focused, it makes sense, right? And I think that's the biggest identifying factor for people that are like getting started. It's like, what style of trader are you? I have a big focus on, trading those like inverse ETFs for NASDAQ ETFs, or when they were like the S&P 500 ETFs. Those were always my go-to. So if like the market is not performing the best, like right now, as we were talking, the market or / NQ was pulling back. So as the market's pulling back right away, I focus my attention on SQQQ that goes up when the market goes down. So those are my go-tos. But do I trade other stocks, or do I trade just like, I never traded Lemonade before, but now it's in my watch list because of the criteria that or the opportunity that it now presents. So I do have my constant flow of stocks that I'll run through, and I update my watch list every single week, but there's always I've been trading Tesla for the past 2.5 months. So I have my go-tos, I have my go-to ETFs, and then I'll begin to filter some other stocks in and out, depending on how relevant they are, or, depending on the opportunity that they present. So.
Beautifully stated. Anne-Marie, same question to you. Finite set or?
Always the same guys every day. I like every stock has a little bit of, every instrument has a little bit of a personality based on the folks that trade it. And so I stick to the futures because I love the leverage. And what I notice is if I'm looking at something like oil, I know it's very emotional. If I'm looking at gold, I know it's something very emotional. If I'm looking at the NQ, I know they like to game the stops. They'll run your stops and then turn it around. ES is the same, but it doesn't have quite the savagery that the NQ has. And so I like sitting in spaces where I know the personalities really, really well. I think it might be because I am really a very introverted person, and it's sort of telegraphed into my work. I'm just going to have these 5 or 6 buddies that I'm hanging out with all the time, as opposed to who's new coming to the party. And what that means is there's some days there aren't opportunities to trade, because sometimes, you got a green bean and grape jelly sandwich, and as the market, you just don't want to eat that. You don't want to have anything to do with green beans and grape jelly in a meal together. And that's really, sometimes the market gives you that. Right. So if I'm looking at the broad scope, I'm like, wow, that looks like crap. I don't want to trade that at all. And so that's the drawback. The flip side of that is if I know what's happening and I have more confidence in my footing, because I know their personalities a little bit. I know their tendency to push on a certain edge or pull on a certain string and that sort of thing.
One of the things that I want to add on to that.
I love that.
Yeah.
I was just staring at this group going, wow, I could be their mom.
No.
So, trust me, I could. Anyways, go ahead. So,
One of the things that I really like about what you said is by you having your go-tos and by having the six that you choose from, one of the things that I've experienced is I used to trade a lot of like natural gas ETFs, which I would focus a lot on natural gas futures, is you begin to pick up on the series of factors and catalysts and news that have either a positive or negative influence. And as you become more familiar with something, it's not that you have it all figured out, but you become more conditioned to be able to understand what to do and what not to do. And in the very simple words of, keeping it simple and having your go-tos to not overcomplicate it, I think there's something very beautiful about that.
very true.
I can tell you the one thing for me, having a dynamic watch list, it's the same every single day. It's the same. Expect the same garbage if you're trading small caps. It's the same brutal behavior every day, day in and day out.
So describe that to me a little bit as somebody that really looks at it and goes, wow, that moves too fast for me. I look at it and I go, that's so much information. I'm a slow sort of steady plotting kind of, and I don't have the ability to look at a bunch of things and go, that's it. It's just not where my wheelhouse of strength is. So when you look at something and it's got all this stuff and you go, nope, that's garbage. That's something I want to look at. That's a maybe. What are you thinking to define those edges?
Well, basically what I do is, first of all, I like to drive fast, I had to get rid of my Harley because I was drifting around corners in my Harley. I couldn't calm myself down. I just figured for my own safety and just, I have a young kid boy right now and I should stop all that. But anyways, I like to drive fast, but what I do is I look at it and I take it in little bite-sized pieces. I look at the predictable areas of support, temporary support, and where can I grab that? And if it doesn't play out, I'm done. I'm moving on to something else. But just take that big picture that's moving really fast and look for the portions that I know that are really easy. And it does really slow down and gives you an opportunity. And while it's just, like you said, just like a blur, it's probably not best to be trading it anyways. If you're just pushing the ask and you're grabbing a resistance break or something, I think you're going to get, like I always say it, I'll say it again, like, when you're catching a football, you got to bring it into your body. And a lot of people, they leave their hands out there and they snap their fingers. And that's what people are doing with these small cap stocks. They're trying to grab a resistance break and they're snapping their fingers. They're not letting it come to them first. I always let these things come to me in some way, shape, or form. If it isn't coming to me, then I'm not grabbing it. There's no way I'm grabbing something just pushing the ask.
So coming to me means you've got a price that you want to pick it up at. Is that right?
I let it tell me generally where it's finding that support. I've learned to really watch this price action and know how it's behaving. But yeah, it has to come back like APWC right now was halted and has a nice big pullback. And for me, I can see the 65 EMA as a predictable area of support. So it's probably going to go down here and bounce at 706. So I can look for a bounce at 706 and grab that really quick. I don't even need to get back up near the highs. I just need to get a little chunk that I like. So if I'm looking for only 10 cents on the play, I'll grab that 10 cents and I'll be gone.
Really, really quick, Andy, you got a compliment on your Mandalorian
I know, I was looking at that.
This is the way. So one thing I just want to go back to the terms we're using. Price action is simply the movement of a stock price up and down on a chart. Support. I'm going to go around and I want to get some definition. So Andy, you were just talking. So when you say support, how do you define support in technical analysis or chart reading?
Well, as far as momentum indicators, strong area of potential support and resistance. Like I said, people think the 15-second is just noise. Maybe it is for you, but we just had that bounce with just a bust of the lower shadow just below the 65 EMA on the 15-second. We bounced really nicely back up to almost, I think, 760 off of the 706 level. And I just missed that trade. I was about to take that, but and that's it. Just like, where do you see these things? I little joke we did in the stream, like, where did it come from? Where did it go? And, just keep on asking yourself, where did it come from? Where did it go? Like, where's the highs, the lows, and where's the in-betweens of where it's found those little shelves, and that gives you an idea, as long as you can see where we're stopping, where the bus stops are, temporary as they may be, and then when you find that golden indicator that they're going to change because I keep talking about it, it's just the way the market goes. Like, once you find an edge, you're telling everybody about it, it's probably not going to last very long, but just find that edge,
And I am hearing the jingle in my head when you say, where do they come from?
Oh, I know. I couldn't help but to sing it when I did it in the stream the first day, and I busted out laughing. I couldn't hold it in. Sorry.
I almost sang the second bar for you. So guys, and I just want to dumb that down to Neil level. Support is just think of it like a line at the bottom of the price chart that the stock price can hit, and that's the low end, and it's supporting it. And a lot of times we're talking about it bouncing off, and Andy is talking about waiting for it to hit it. And he's also talking about discovering where exactly that support line is. And you'll see a lot of technical traders actually draw a line on their chart so that they have a visual reminder of what price is that support level. Now, wondering if I can get over to Ricky. When we talk about resistance, what is resistance?
Yeah, actually, as you guys were talking about this, I just thought I'm more of a visual learner. So I'm going to share my screen just so you guys could see for all the people that are watching right now. So again, one of the stocks that I'm paying attention to, or one of the ETFs, is SQQQ. SQQQ goes up when the market goes down. Why am I paying attention to this? Well, this is a NASDAQ ETF, right? And when NASDAQ is, again, at these very overbought levels, I begin to ask myself, okay, this is too good to be true, and prepare for a pullback. It's not that the market's going to crash, but the market pulls back to the SMA line multiple times as it continues to ascend. So as I'm preparing for this, on the 1 day, 1 minute chart for SQQQ, you guys can see that, where is a resistance level? I view resistance levels not as an exact price point or an exact support. Like, it doesn't have to bounce at 1330 exactly. That's how I used to approach it. And I think people always think that it's at exact price points. I just view it as like a range, right? So yesterday, it had a slight resistance. You could see right around 1330. So it struggled to break above that specific price point. As we know, old resistance levels can become new support levels. So as it pulls on back, it validates the support here, it consolidates, and then it begins to indicate signs of an uptrend. Again, with that simple idea of the 3 stages of a reversal: rejection, consolidation, and then confirmation. Now we're pushing up. Now, where do I want to sell, right? A resistance level is normally where something gets rejected. You could see during the pre-market session, there was, a resistance right around that 1350 to 1355. So as we approach these higher levels based off of previous resistance levels or resistance range, then it would make sense on, hey, as I approach 1350 and 1355, I might want to sell my position here because it previously got rejected. So by understanding the low points and the high points of the certain levels, depending, and these certain levels are all over the place. They're not just on the 1 day, 1 minute chart. They can be on the 5 day, 5 minute chart. They can be on the 180 day, 4 hour chart. The really cool thing about this is that, a support level and a resistance level, in my opinion, when we always say wait for confirmation, we say wait for confirmation until, a support level does not become a support level until it proves itself, right? Just because it was a previous resistance level doesn't mean that it had to bounce here. And this is why confirmation is so important. This is why we wait for that consolidation. It broke above the EMA line. It began to indicate signs of an uptrend. And then now we validated that previous support level or that acted as a previous resistance level. We're approaching up here, and it doesn't mean that it has to, right? So now with the idea of FOMO, it doesn't mean that it has to get rejected at 1350. But again, if I bought down here and it previously got rejected here, I understand my play. I understand the margin. So from the overall lows of 1330, right, to the overall highs of 1350, I'm going to not even go to 1355, just 1350. That's 1.5%. So am I really going to not sell my position at 1350 to make an extra 5 cents when I can lose from 1350 all the way down to 1330, I can lose 20 cents. So, big picture, the extra 5 cents doesn't really matter. It was a previous resistance range. I can load off most of my position here, and I can always get back in if it breaks above 1350 and begins to make new highs. So that's the way that I view it.
Big picture. Getting some upvotes on a question for you, Ricky. What settings do you have on your MACD and your RSI? And if you wouldn't mind just giving like the super, keep it simple definition of those 2 indicators.
Yeah, so let me go back to sharing my screen. I have default settings, and I know every trading platform has different settings. One of the things that you can see with my TOS is it actually shows all of my settings up here. RSI is set from 30 to 70. So those are where, my oversold or overbought levels are. And then when it comes down to, was it my VWAP that they asked? It's -2, 0, and 2. But those are default settings on TD Ameritrade. What I do is I change the colors. And just because a lot of these indicators have the same colors, but the VWAP indicator, just to put it into perspective, I use it more as a day trading indicator. And a good example can be Let's see if I can get it here. This is a good example. So this is BABA, and the VWAP indicator are these three lines. It's the purple line, the red line, and the yellow line. And the thing that I find useful about this indicator is that, again, indicators are to be used as a reference. They're not perfect, right? Never a sole reason on why you take a position, but I focus a lot on direction. I want to put my money in something that's showing signs of an uptrend. So when something trades in between the middle and top VWAP, it's showing signs of higher highs and higher lows. The exact opposite of something as it's selling off. What was it? It was ticker symbol AA. Ticker symbol AA is trading between the middle and bottom VWAP. So that's making lower lows and lower highs. So again, then that's indication of a descending pattern, maybe a reason I don't want to take that position. Now, when it comes down to my RSI, again, same approach, depending if it's on the 1 day, 1 minute chart or the bigger time frames. When something is below 30, that's considered oversold. So it's a good deal, but a good deal does not mean a good buy, and it does not mean that it can't continue to sell off. The same thing with something being overbought. Tesla's been overbought for the past 2.5 months. Yet it still continues to uptrend. Just because something's overbought doesn't mean that it can't continue to uptrend. And this is why I always stress that, yeah, it's cool to have these indicators to use as a reference, but never a sole reason on why you decide to take a trade.
Excellent, thorough answer as always, and succinct to the T, Ricky. Thank you for that. All right, guys. So we've got some very, very specific questions, and guys, we have a wide variety of experience levels here attending the event today. So I do want to lean toward the more beginner. So I don't want to get too specific with what would be like more advanced or expert level questions. I guess so. Here's one for you guys. Everyone in here that's watching this event should have at least seen a price chart for a stock at some point, whether or not you've actually had time to mess around with it and try different indicators on top of it, or try different other things with it. That's a question in my mind, at least. But I'm wondering, one of the main things we always get asked is, what time frames or time increments are you looking at on your charts? And this is going to vary by style. So I want to start once again. Actually, Anne-Marie, I want to kick this over to you. What time increments are you generally looking at, and why?
Okay, great question. And again, that answer is going to come based on how much I need to filter what's coming through my head. And so for me, I sort of have the attention span of a Cocker Spaniel, to be honest. I'm going to be frank. And so less is always more for me. So I will look at very big pictures, and I will look at weekly charts and monthly charts and daily charts. And there I will look at, all right, based on last week's close, how close am I to that close now? Have traders been moving up? Have traders been moving down? So all of the framework for work, remember at the very beginning, I said, hey, the best thing to do is look big and then collapse inward. We look at the monthly, the weekly, the daily. And then when I come down to the actual trade, I can see where all the big money has said, I'm not buying here anymore. And there's a lot of supply at the top. The reason price doesn't move up is because there's more supply than demand. That's why if we go to the market and we're looking for, I don't know, oranges, when the weather's been terrible, oranges are many, many, many more dollars than they would be than if we've had a bumper crop. And so it's the law of supply and demand. Prices don't move up if there's too much of it there that nobody wants. And so when I look at the daily and the weekly and the monthly, I see where those levels are, where people go, you know what, I'm not spending any money up here. And I can see where they go, hey, if it comes down here, it's value, I'm going to buy it. And those big pictures, I then can collapse into something like a 30-minute time frame, which is the one I ultimately use most of the time. And it tells me where the big levels are. So I will say, okay, that's a big level. It can blow past it, but eventually it can't hold. Or that's a big level. We've already got negative pressure. it's probably not going to hold that zone if it comes in here and tries to breach over the top again. So that's really what I'll do. So the big answer is I look at all of them on the bigger frames to make sure I know who can push me, right? I don't want to get into a trade and then find out there's a gorilla on the other side of the tug rope that I've got that is going to pull me in the direction I do not want to go. So that really is sort of it. I sort of want to find the general flow of the river and make sure that I'm paddling in that direction.
Beautifully stated. Everyone, we are at time. In fact, we're about a minute over. So I want to thank each of you, Andy, Ricky, and Marie, for being with us this morning, for taking the time out of your trading days to give some education to our watchers here. So thank you all so much. And I hope to have you at one of our future boot camp events.
Thanks so much.
Thank you for having us. Yeah, thank you.
Thank you, Neil.
All right. Thank you, guys.
Yeah.
Order filled. Check us out.
You know what time it is.
This is the Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like,
If you with the squad, then you already know what's up. It be going down, but my account is going up. I'm about to make another 100,000 bucks. Rolling up that chain, I'm about to take another puff.
Hold up, I made a killing, now my pockets got swollen. Independent, now I'm taking over. I'm a lot richer, you a lot broker. I'm a pot smoker, stockbroker, blowing up like a supernova. On my mama, I was born a soldier, the best in the game, man. I thought I told you. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like, I am unstoppable, I can do anything I ever wanted to. Never did anything they ever wanted me to. Got on my side and I'm not gonna lose and they're not gonna win. I see them, the haters, it's all cause I'm getting dollars again. Commas on commas on commas, I'm buying the dip. The market is dropping again. I can see him hating from the sideline. If you see a hater, tell him bye-bye. Watch my money grow, 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 grow. And my wifey like, whoa, 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 whoa. Whoa! Somebody better stop me cause there ain't no competition and I'm coming for the top position. Obliterating the opposition every time that I jot it in the composition. Everybody wanna stop and listen cause I bring it to you hotter than the oven in your mama kitchen. I'll be getting here like a politician. I'ma get bread when you stack looking taller than Scottie Pippen. Ain't nobody ready for the Armageddon when I pop the clip and I ain't playing. I'm spraying you brain, I'm bringing the pain like Damon Wayne. You disappear like David Blaine. I'm dropping bombs, Saddam Hussein. Stop and aim, pop you lames and pop champagne. I ain't playing so stop the games, you know the name. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like, Yeah. 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 Alright, man, I'm out.